Hi everyone, Oleg Tkach here, and today what I want to cover is our appraisal gap strategy, and basically kind of go over how it works, what top producing real estate agents are doing to really give themselves an advantage when they're writing offers. I'm sure all of you guys have ran into a situation where you had a low appraisal, and that's something that's really top of mind with clients as they're making offers. And there's a lot of there's definitely a lot of confusion around what happens if an appraisal comes in low. What does that mean? Some clients feel like it kills the deal. Other clients feel like if an appraisal comes in low, they have to cover the whole difference between what the purchase price is and the appraisal is, and now their down payment is going to increase. And just there's a lot of confusion around that. So I wanted to talk about our appraisal gap strategy and what we're doing, as a lot of our clients are waiving their appraisal altogether right now. And let's face it, at the end of the day, low appraisals will happen, especially in a super competitive market like we're in right now. It's as competitive as we've seen it. I'm sure you guys ran into scenarios where you've seen homes go for 200, 300. Some homes have gone for $1 million over ask. And so with that said, here is essentially what we do from our end. Let's say you have a client who's buying a home and they're putting 20% down. They're buying a home for $1 million, so they have a $200,000 down payment. Okay, our loan amount's $800,000. Now, let's say the appraisal comes in at $900,000. Now, most borrowers believe that that means that they have to do an additional $100,000 down payment, and that is not the case. What we do, what our strategy is well, we as a lender, we're not looking at the purchase price and determining the loan to value off the purchase price. We're determining it off the appraised value. So in this situation, we have the same $800,000 loan. We have a $900,000 appraised value. Even though the purchase price is $1 million, our loan to value is going to be based off the $800,000 loan, $900,000 appraised value. So we're looking at roughly about a 10% down payment now instead of a 20% down payment. Therefore, all that changes to us. We don't necessarily need the borrower to increase their down payment or pay the difference. We are just going to look at it as a 90% LTV versus a 80% LTV, which really means all we need to do from our end is add mortgage insurance. Now, when it comes to adding mortgage insurance, there's 3 different ways to pay the mortgage insurance. One is you could pay it monthly. 2 is you could do an MI buyout. So a lot of our clients, instead of bringing in an extra $100,000 difference, like some lenders are telling them, or some agents believe that's the case, they're just saying, hey, you know what, I'm just going to buy out the mortgage insurance. It's going to cost me a couple grand, and that's all. Others are doing what we call is a lender paid mortgage insurance, LPMI, which pretty much means we're giving them a slightly higher interest rate and they don't have monthly mortgage insurance. That is a third option. Now, the reason why this is important is because as agents, as you're sitting there and you are writing an offer with a client, when you're sitting there and you're trying to say, hey, we're going to write this offer, we're going to waive the appraisal, and when they say, hey, what happens when the appraisal comes in low, if you can't properly explain exactly these options to say, listen, if it comes in low, it doesn't mean you have to come in with additional X amount of money. It just means that you're going to have a change in your loan terms from a loan that maybe was 20% down to 10 or 10 to 5 or 15 or whatever. And it's not as dramatic as a difference from a cash to close perspective. And that's usually the biggest issue people have. It's not the difference of payment of $100 or $150 if they have to pay mortgage insurance or depending on the purchase price. It's usually the fear is, do I have to bring in so much more money? So with that said, I just wanted to share that. That is our appraisal gap strategy. We have had a ton of deals where clients have went under contract, thought it was going to be over when the appraisal came in low. We worked it out. We closed the transactions. They did not have to bring in any more money whatsoever. And so I just wanted to share that with you. If you have any further questions, you want to discuss it in detail, give me a call. We could go over it. If you have any clients in any scenarios where this is something they're running against and you want me to get on the phone with them, absolutely no problem. Let us know how we could help. Hope you're having a great day. Reach out to me and my team at 425-478-7676 if there's anything we could do for you.